welcome everybody, the people who join us today. It's been a while. I actually haven't done any sessions the whole of August, September. It's quite a treat to be doing this IBF fellow session again. I just wanted to pay tribute to the man that you see in front of me, because every time that I do a session with an IBF fellow, generally speaking, they're immensely hard to get, but not so for Lalit. So when I wrote to Lalit, I think within 10 minutes, he actually responded saying, let's do it. And this is in the midst of Trust doing the big launch and so on and so forth. So I'm very appreciative that he's taken the time off today to do this with us. And hopefully in this session, we can sort of like glean some insights in terms of his career, and then the advice for people who join us who are interested in finding out more about what he does and risk management in a digital world that we have, that we find ourselves in today. So without further ado, I just want to say, Lalit, thank you so much. Welcome.
Thank you so much, Arian, and thanks to IBF for the opportunity. I think it's always a great pleasure, and happy to help.
Fantastic. Okay, so you're probably obviously this is the first time that we're doing this, but the first question I always launch is basically about my guest's personal history, right? So to that end, I always tell people, like, Lalit, when you were going to school, surely you didn't wake up one day and say, hey, you know what, Mom, Dad, I think I want to be the chief risk officer, or I want to get into risk, right? So for me, I want to be a pilot, but obviously that didn't happen. For yourself, how did you end up in risk? Or was it something that was planned, that you had an epiphany or something like that, or did you discover it by chance? What's your story?
Yeah, so interesting, right? So actually, funnily enough, even I wanted to be a pilot in the Air Force, but they wouldn't have me. So I ended up doing economics. And you're absolutely right. I mean, when you are in college or when you are studying, you don't hear of occupations or jobs like risk management. You think of sales, marketing. Those are sort of the kind of things that you know about, because as a consumer, you see those things. You see salespeople, you see marketing people, but you don't think of risk management. So was the case with me. I actually wanted to go into marketing. It so happened that I ended up in economics, and then I did business economics as my education. And to be honest, what happened was that we had Citigroup or Citibank, as it was called in those days, come to our campus for recruitment. And I got recruited into risk operations in collection. And I was like, okay, not so bad. I've got a job, something to pay the bills and, keep my hobbies going. And we'll see how this goes. And then maybe in few months' time, I'll go and do something else. I'll go into marketing, something that I wanted to do. Some of my friends were there. Or advertising, it seemed very glamorous at that point in time to do those kind of things, all the nice glitzy stuff. But here I am, 25 plus years on, and I'm still doing the same thing. And of course, I've done different things within risk management, because once I joined the bank, I realized how varied this field is, how there are so many things to do within it. It's so many ways to do it across the organizations. And I've had absolutely a great time. What I also realized was that actually, if you think about a bank, a bank is nothing but risk management. So you have people who deposit money with you, and then there are people who need money from you and they borrow from you. And as an employee in the bank, we are all risk managers. Our job is to ensure the safety of the money of our depositors and make sure that we lend responsibly. And so risk management is something that is very inherent and core to banking. So I was kind of happy that I'm in a function which is important. And when you think about it broadly, we're all actually risk managers, just crossing the road every day, choosing where to go, where not to go. These are all risk management decisions. We want to fly with a safe airline. We want to go to a safe doctor, a safe hospital. And it's risk management, right? It's managing the bad outcomes or adverse outcomes. And so it is in a bank. And so I kind of enjoyed doing it. I got to do it in different countries, in different organizations, and I kind of stayed on with it.
Hey, Lalit, I just wanted to latch on to the original aspiration of, like you said, marketing and advertising, right? Did you manage to find aspects of those things like marketing, advertising? Did you manage to find those parallels in risk management, or did you fall in love with a totally different set of skills and experiences? Did you manage to find, or did you manage to find aspects of those things?
Look, I mean, they are slightly different words.
Mm,
I had a lot of friends in advertising, so you want to kind of
mm,
emulate your friends and do all the cool stuff that they do.
mm.
But then you realize that what you do is also cool in a very different sort of the way, in a very
Exactly. Yeah.
flashy sort of a way, but it's also very interesting because risk management does involve some amount of data, some amount of analysis,
Mm-hmm.
etc., and a storytelling of a different nature. Because at the end of the day, an ad is telling a story about a product, and when you do risk management, it's a storytelling of your risks and understanding of your risks, and it's a different narrative. But the
Mm,
fact that you use intuition, the fact that you use information, and you combine these to come to outcomes, uh, in itself is a very interesting, intellectually very satisfying as a discipline. And
mm,
risk management has changed over a
mm.
period of years, right? So
Yes,
things have become very different from what they used to be, and perhaps we can talk about it later in
absolutely.
the
Yeah.
session.
Yeah.
Um,
Yeah.
and so it then kinds of keeps you interested, and then as you start to specialize in something and you start to become successful at it, then as they say, why change the recipe when something is working well.
Mm. And before I go to the next question, which is what you just mentioned, Lalit, can you tell everyone here, I guess, people who's joined us, what is your current remit at Trust, for example? I mean, what do you cover? All aspects of risk? Is that all? Does it all flow up to you?
Yeah, so I'm the chief risk officer
Mm-hmm.
for Trustbank.
Mm-hmm.
We are Singapore's newest bank. We are a digital bank, and we'll perhaps talk about it a little bit later. But
Mm-hmm.
in terms of my own role, I'm responsible for all the risks in the organization. I have a wonderful team of colleagues and peers who help me do it. And as I said, that in a bank, we're all risk managers and we all manage different aspects of risk. But I am a single point of responsibility when it comes to all the risks that impact the organization, and
Mm-hmm.
I have to take accountability for those.
Uh, that's awesome. And I guess latching on to that question, when I did sort of like look at your career history, I mean, obviously when I looked at the early years and so on and so forth, and correct me if I'm wrong, I see there's a very strong retail banking kind of like flavor. But beyond that, I think what I realized is for yourself, you're man who's moved from traditional sort of like risk management to this, like what you mentioned, like analytics and the tech and digital aspects of risk management. So my question is, when you reflect on your career, what has been some of the prominent shifts that you've had to embrace or overcome? It's basically, since you've been in business for such a long time, this is more like a compare and contrast kind of
Mm,
questions from your early days to what you are embracing or have to embrace now in what
mm.
you do. Yeah.
Yeah. So I joined in risk operations actually. So I joined in collections, where you
Mm,
work and interact with customers who have overdue payments, and you talk to them and you collect. And then within that, you get into more of a management role where you're managing teams and processes. From there, I changed into what we call policy internally,
mm,
which is that you move away from the more operational aspects of it and you move into the design
mm,
aspects of it. You talked about advertising and marketing, so you move in a sense of risk design rather than risk execution. You move towards analytics. I also got an opportunity to move countries. So I ended up in UK with Citigroup. I worked there for about 7-8 years.
mm,
Then I got an opportunity to come to Singapore to work with Standard Chartered in a different role, in a country credit head role. And then as things happen, you grow into a role, or you sort of aspire to do different things, and you put your hand up and say that I'm interested in new things, and hopefully the team that supports you and the management thinks that you have some skills and you have some capabilities. And then I became a part of this project, which ended up as a digital bank that we have today, which is Trustbank.
mhm,
So it's been a story of successive build up of experiences, which are diverse, both organizationally and job wise and functionally, and
mm.
all the learnings that you embrace over a period of time to develop a broad understanding of your function, which is then recognized to say that, okay, we can trust this guy to do this. And
Right.
then that's how you get the opportunities. And of course, once you get the opportunities, you have to put those skills to the table and actually make it happen.
when you think about, when you first started in risk that many years ago, and what it is that you do now, I mean, do you have any sort of like reflections in terms of, never would I thought in how many years that I would be doing this?
Yeah,
Back in the day, I would never be doing that. But
absolutely not.
what might, are there some examples of what this might be
Yeah,
in terms
absolutely
of what you
not. I
do?
mean,
Yeah.
if I were to time travel
Yeah.
and talk to my 30-year-old self, and
Mm,
if I could tell that 30-year-old self that, a couple of decades on, this is what you would be doing, I wouldn't believe it. And say that you are a figment of my own imagination and you've time traveled back from some imaginary future which doesn't exist, right? So I would have never thought that this is going to happen.
mm,
Um, the other interesting thing is that I would have not thought that the world would change the way it has changed.
mm,
You know, um, it's important to remember that things like an iPhone is only a 10, 15-year-old phenomenon.
mm,
You know, it is important. I still remember having rotary phones in our house. I still remember rolling up windows using a handle, not pushing buttons. So uh, things were more mechanical and less digital, right? And
mm.
the world has changed completely. Every industry, every sector has changed. 20 years back, we wouldn't have been doing this conversation using the
No, no,
technologies that we use
no.
today.
Yeah,
Not a single one of these technologies existed 20 years ago.
yeah.
Laptops weren't that available, links weren't that available, Zoom, probably the founder was not even born, etc., etc. Right? So the world has changed. Every sector has been impacted, banking has been impacted, risk management has been impacted. And
Mm,
so what we do today as risk managers is dramatically different from what we used to do 15, 20 years ago. In 20 years ago, credit risk, operational risk used to be the main areas of
yeah,
focus.
yeah.
Today, you could broadly classify risk into at least 10 distinct categories. And they range all the way from the traditional ones like credit risk, operational risk, to cybersecurity, which was nobody had heard of these things, to technology
Mm,
risk, nobody had bothered
mm,
about these things, climate risk, reputational risk, market risk, traded risk, model risk, etc., etc. So as as the industry and the world has become more complex, new challenges, new risks have emerged, and the job of a risk manager today is vastly different. And indeed, the skills that are needed are vastly different. And as
mm,
indeed are the kind of people who come into the industry now as risk managers is very different. So someone who manages climate risk or reputational risk is very different from somebody who manages credit risk. So you could be, again, going back to where we started, you could be a marketing communications professional who could come into reputational risk management, because now the reputational risk is on social media, things going viral quickly, communication, your own messaging, etc., etc.
mm,
So it's become a very wide church where people with very different skill sets can come in
mm,
and contribute and learn. So it's no longer a slightly narrow channel of people, which it used to be at one point in time. Now it's
mm.
very different.
Lalit, I think what you just mentioned is I guess it's, yeah, you're right. It's very sobering. It's also very amazing. And I was just thinking about what you said just now about you being like the single point of contact for, all of risk for trust, right? And then, you had mentioned that there's so many sub-disciplines of risk now, all splintered. How do you deal with that? I mean, when you think about your traditional sort of background, how 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 are you grappling with all these new channels of, these sub-disciplines of risk and so on and so forth? How do you keep yourself, knowledgeable, so that, ultimately everything rolls to you and you know exactly what to do or not, what to do? I mean, how do you deal with
Yeah.
these new things?
Yeah. So, we often talk about this in our own world, in our own industry
Mm,
as T-shaped skills, which means if you think of a traditional T, there
mm,
is a wide top and then there is a strong stem. So basically, you're good at one or two things, and then you expand your knowledge base to cover a much wider base
mm,
using that strength that you have and the principles that you've learned. And the other thing I'd like to say is that in the modern world, or in today's world, you have to keep updating your skill sets
mm,
continuously. There
mm,
is there is nothing called I will stop learning because I've learned, or your education doesn't finish at college or university or postgraduate. It
mm,
has to continue through your careers in
To your life. Yeah.
through your life, and
Yeah.
in batches of 5 to 10 years. And it's like, even if you buy the most advanced iPhone, you know the hardware may be very new, but the software needs to be continuously updated
Absolutely.
for
Yeah.
it to function. Your apps get continuously updated. Similarly, your own brain and your own skill sets, consider them as a hardware, and the knowledge as the
Mm.
software, and it needs to be continuously updated. Because there's a guy called Alvin Toffler. He's a futurologist, and he's written that the illiterates of the 21st century are not going to be people who cannot read or write, but people who cannot learn, unlearn, and relearn.
Relearn. Yeah.
So sometimes you just have to unlearn both the ways of doing things, and what you've learned in the past, and you have to relearn and find out new ways of doing the same thing. So uh, for all industries, including our own, banking and risk management, I think that's the big challenge. It's not what the skill sets that you have, but what's your adaptability and flexibility to changes, and your ability to learn new things. So no matter where you are, what stage of your career you are, where have you started from, what's important is how can you upgrade yourself to adjacent skills and find new career paths.
I think that's a very good point that you just made. And I think something that I want to latch on later as well. For the people who are joining us right now, I mean, if you have any questions, please do ask. I mean, if you're currently a risk manager and you want to ask Lalit a question, feel free to put in the Q&A box and we'll try to answer it if we have the time. Lalit, now, before I go into, aspects of my questioning that are a bit more external, I think one of the things also I was thinking about is, in my dealings with job seekers and coaching people, I often tell people that it's not just about, the hard skills, but also the soft skills, So I think one of the things I wanted to ask you, personally, I mean, again, one of the self-reflective questions that I want to ask you is basically, when someone sees Lalit Lohia's background, it seems as this guy is just on a wonderful trajectory. It's so linear, it's so beautiful, so smooth, but surely there has to be things or people behind you that sort of like endorsed you, went to bat for you, believed in you, for you to be, sort of like where you are right now, opportunities. I think the question I want to ask is, what's your experience with the importance of having a very strong network? Because I've often always believed, and I tell job seekers this all the time, it's not about just, your skills, right? I mean, you can be the smartest guy in the room, but if you don't have those sort of skills that people, they want to be near you, they gravitate towards you, and so on and so forth. That's then it's that's a very important part that they're missing out on. What's your thoughts on that?
Absolutely, and I think there's a lot to unpack in what you've said, and I'll try and answer that, and I'll unpack that. So you're absolutely right. Look, in the initial part of your career, your technical skills or hard skills or your knowledge is very important. As you move along, your ability to work with teams becomes more and more important, because at the end of the day, there is only a finite amount you can learn, because there is a limitation of time and capacity. And there are very intelligent people who are smarter than you, who are there to help you, right? So you don't have to know everything. That's not required, but you absolutely need a network. I mean, even if you're the best football player in the world, if you're the best striker in the world, you do need midfielders and the team to pass the ball to you to be able to score. So the ability to build networks and consistently have a positive sphere of influence, is extremely important. But it should be an effective, efficient network. Having 1,000 connections on LinkedIn, or having 1,500 Facebook is not a network. I mean, people today think it's a network, but it has to be an influential, effective network of people, leaders you look up to, peers you can work with, and people who are happy to work for you and with you. So the network runs in a very 360-degree fashion. So there have to be people who have to believe in you to give you the breaks. There have to be colleagues to help you while you're at it, because going back to your previous question in terms of how do you do all these risks, well, I don't. I have a great team that does it for me and along with me, and they help tremendously. And also, you have to have people who have faith in you, as a leader or as a manager or as a supervisor or as a colleague, who will say, yes, we're happy to work, because we feel supported. So as time goes in your career, you also transition from being a technical expert to being a manager of people, collaborator of teams, and a manager of other stakeholders. And so the soft skill aspect, which is what this all boils down to, becomes
Yeah.
equally and vitally important. So I would say that by all means, go build networks, but build effective networks. Build deep networks, because superficial networks don't help.
Yeah.
People
Yeah.
have to recognize your skills and be honest to yourself in terms of your skills and weaknesses. Take feedback from colleagues, take feedback from stakeholders, and continuously improve even your soft skills. It's actually a lot harder to improve your soft skills than to improve your technical skills. You can always read a book and get hard information on how technology works, but changing ourselves is the hardest part. So that requires a lot of work and a lot of reflection. So absolutely important to do.
Oh, awesome. Okay, so a couple of questions in quick succession, Lalit, and I think again, all the questions that I'm asking is really based on the conversations that myself and my colleagues have on a daily basis, honestly, to with job seekers, right? So one of the things that we see the types of profiles that we see are career pivoters, right? People who are looking to make moves from one thing to the next. I think one of the common ones I'd say would be that, let's say, an RM, right? Who for whatever reason doesn't want to do sales anymore. Maybe wants to do, instead of doing credit, want to do marketing, for example, right? So also, sorry, instead of doing marketing, you want to do credit, right? So they have probably some, right? But not all. For yourself, looking back on your history and now as a, potentially hiring manager, I mean, what kind of qualities or traits do you think you would value highly, for individuals who are looking to make a move or a shift, and not necessarily having that plug and play background? I mean, what sort of, possible bright sparks, that do you think that you would look for, in order to possibly give them an opportunity? Do you know what I mean? Is there anything is there anything that you might look for?
Yeah, so few things, right? So first is that if you're an RM, it's fantastic because you understand customers. You meet with customers. And that's very vital, because if you don't understand your market, you cannot serve that market. Because at the end of the day, whether you're a risk manager, whether you're a RM, we're all there to serve the customers, because customers give us the revenue. Revenue is what runs the company. So I think that's a great positive to have, something that many risk managers may or may not have, right? They may not have interacted with customers. So don't undermine that value that you bring to the table. Second thing is, you hopefully understand the product very well, because ultimately the risks come from the design of the product. So if you understand the product very well, that's another big positive, because you've seen it being sold and what works and what doesn't work. I think the other things that you need to bring is, again, as I said, you need to have a very open mind and be very flexible to new ideas and learning concepts. So what great, set it aside for the moment, empty your mind and start to relearn. Look, risk management is one of those things which is not taught in any university. There's no international degree for it. There isn't a college for it. It is something you have to do on the job. You have to do in an organization, and you have to do some hard yards in terms of understanding some core principles. So if you're open to do that and you have an analytical mindset, I think you can make those transitions. I mean, I know of many successful risk managers who've gone on to become CEOs, many people who are in the business who have become risk managers and very successful business risk managers and have gone back. So absolutely, these things are very, very possible. There are no barriers. It's just a question of the individual's choice. Now, if you are successful as an RM and if you are continually growing there, would you continue to grow in the same trajectory in risk management? Maybe you'll have to learn a little bit, right? Maybe you have to take a bit of a pause and say that, okay, let me learn and then become successful. Now, that's a call that individuals need to take, right? So in my own career also, there was a period of time when I went into sales, and I did sales for a while, but I found that my heart lay in risk management, and I came back to risk management. And that's perfectly fine too. There are people who come from the business side of things, come to risk management for a few years, and then go back to the business side, and they become very effective business managers, right? Because now they've seen the other side of the coin. So, as you said, the career is not linear. Mine looks linear, but if you, but there are changes. So when you change a country, you have to readjust. There's a cultural readjustment. There is a process of readjustment that you have to undergo. Things are done differently. Risk management is not done uniformly across the world. Different companies, organizations do it differently based on the needs of that market. So I also had to relearn albeit mine may have been an easier journey because I came with some background in risk management. But if you're
Right.
not, it's not, I don't think it's a hindrance. I think I know, like I said, I know a very successful business managers who become very successful CROs and vice versa. There are
Mm.
banks today who have taken their CRO and made them the CEO.
Awesome.
I can top of my mind think of a couple of them. So,
Mm.
uh, there are no barriers here. It's just up to the individual.
Hey Lalit, I know that in your career you've probably seen a ton, 1,000 CVs already, and so on and so forth. And again, this is a very real question, and I don't know whether or not, you're able to lend some insight. One of the things that we see often, on the topic of RM profiles, right, is that when they send their resume across for us, or when I see a resume of an RM, and he or she is aspiring to go into risk, for example, right, or credit risk, for example, right? The resume actually shows off all the, top performer, top sales performer, top sales. Basically, what I'm trying to say is that when I look at the CV of let's say a retail RM, consumer banking RM, I see that this person resume continues to tell me that he's actually better for sales, right? So I don't know. I mean, I don't know. Do you still value those things, or would you rather see some other things that sort of like demonstrate that this person could actually be very good for, let's say, credit, for example?
Yeah.
What are
So,
your thoughts?
so look, if you're performing well in a particular discipline, what
Yeah.
it tells me is that you're very driven as an individual,
Mm,
right? You're obviously hardworking, because you can succeed by accident once or twice. You will not
yeah.
consistently be successful because you got lucky. Yeah, you
Mm,
don't get lucky every day. So
mm,
if you are consistently successful in whatever you do, you
mm,
clearly have a set of skills, and you clearly are the kind of person who's very driven to succeed.
mm,
And that's a big positive to bring to the table. Then it's a
mm,
question of what's your real experience like. So if you are a RM in mortgages, for example,
yeah.
you really have to understand risk management principles to be able to successfully sell loans.
Mm,
Or if you are in private banking, then you really have to deeply understand the client. In fact, in corporate banking, most of
yeah.
the RMs are actually have credit authorities and risk initials, because
Mm,
they're the first point of contact with the customer, and they are the ones who assess a customer and the requirements and the needs of the company and the organization.
mm,
So what I'm trying to say is that these distinctions, while they appear to be very departmental from the outside, there is
mm-hmm,
a continuum there. And so when you look at a CV, and if you see a person who's continuously successful, has an
mm,
analytical mindset, would be curious, great attitude, ability to work with people, they are a great candidate. Then it's really up to the individual if they want to make that transition,
mm,
because sales and marketing has its own excitement, has its own adrenaline rush.
yeah.
Risk is slightly different. We have a very different kind of excitement and adrenaline rush. We don't have numbers and targets to meet on a daily basis.
Mm.
So you require a slightly different mindset. And if you have that mindset, then why not?
How again, pushing you into a corner almost, sorry, but how does one demonstrate that kind of mindset, do you think? I mean, how does one put it on paper? What might you be looking for? Would you be looking for a specific demonstration that he or she is taking a specific credential or course, or how do you discern that this person could be actually, as an effective as effective as a risk professional as he or she has been successful as an RM?
Yeah. So look, there aren't that many courses. As I said, that
Mm,
risk management is not something that you
mm,
get to learn in a college.
yep.
There are certain areas like information and cybersecurity where there are certifications that you can do to
Mm,
get some basic credentials. But in many areas of risk, that's not true, right?
mm,
I
mm,
think it also depends on the CV. So if you have a 3 or 4 years of experience, then I think you are very open to career changes. I don't
yeah.
think that there is too much to read into a CV, because you can, if the person has in an interview or in a meeting, or knowing the person, if they work in the same organization as you do, they show the ability to be flexible and to learn, and they are interested, then I think it is very fair to give them that opportunity to be able to move into risk management. If you have
Mm,
done something for 10 or 12 years, then you would have a track record which will be reasonably varied. There are very few people who do exactly the same thing for 10 years. And then
mm,
through a conversation, you can get a bit of an insight into how they think about problems. Can they look around the corners? What have they learned in the 10 years in terms of some of the successes and failures?
mm,
Um, and if they were into a risk manager's position, how would they think about these problems? So you get a sense of the attitude and the aptitude of the person, and based on that,
Right.
you take those decisions. And like I said, that there have been very many successful people, or many successful people who've come from the
Mm.
business side and gone into risk, and made that other transition as well. Because this risk is not like a catch-all where you stay in risk management for the rest of your life. There are people who move
Mm.
up and go on to do other things.
Right, right. And on the topic of like education, right? I know you mentioned that there's no like like a degree program for risk, but are there any sort of professional certifications, four-letter designations and things like that that you might value highly or regard highly, that people can actually think about exploring a little bit deeper if they actually want to send a signal to the market that, hey, look, I'm trying to make that jump, and here's my commitment, and here's what I'm trying to do. I'm trying to take this course or this certification and so on and so forth. Are there any sort of like certification programs that you would regard highly if you see these credentials on someone's CV?
Yeah. So a couple of things. One is that
Mm.
most companies, most organizations, financial institutions have
Mm.
internal training programs.
Mm-hmm.
So first thing I would recommend to people is that do sign up for those, right? A lot of the companies, including Standard Chartered, where I was, and my previous organizations, did offer a lot of risk training, which is internal to the organization.
Right.
So it's always good to see on the CV that if somebody's gone and done those training programs, then they're obviously interested in the function, right?
Right.
I have personally benefited from it, even though I was not nominated to some of those trainings. I took the pains to read the training material just to learn
Mm.
something new, just to get some interesting insight. And that can help you in your conversations with your prospective employers or other people. And that's
Mm.
how I moved out of risk operations to core policy, because people I spoke to realized that, okay, this guy has taken the trouble to find out about things that not necessarily were in his remit or he was aware of. In terms
Mm.
of external courses, I think IBF has a program in terms of the Skills Future, a set of programs where they're trying to create courses which people can take. There are certain areas of risk where there are very, very good quality certifications like
Mm-hmm.
technology risk, information and cybersecurity that you could do. Um, there are other areas that are very specialized, where I would say very honestly that you would need to have more technical degrees to get into. So, for example,
Right.
modeling, data science, etc., would require some background, statistical, economics, mathematical degrees, because they tend to get extremely technical. There are other areas where your experience in the workplace is reasonably good and enough. So operational risk is one area where if you've done a few things in the bank and
Mm.
because not everybody does the same thing for 10 years. There are people who move around 2 or 3 functions. And if you've done
Mm.
that, then you would be a good candidate for operational risk, because you've seen different things and different kinds of problems to have seen and dealt with. So I wish there was a single silver bullet answer to this, but there
Yeah.
isn't.
Fair enough.
It is depending on which area of risk. So climate risk is an example. How do you train for climate risk?
Yeah.
Yeah, it's an emerging new area, very exciting area, very interesting area. Uh, should an environmental scientist get into climate risk? Perhaps, because
Mm.
they understand the impact. Should somebody from the insurance industry get into this because they understand,
Mm.
disaster management, disaster and probabilities of things going wrong, and how do you assess them? So, like I said, that there are a lot of adjacent skills that you could acquire to get into risk management as a function, because it has become a very broad church now. It's no
Yeah.
longer the days of 1 or 2 things or 3 things. You could be a trader in the front end, and then you could go on to do market risk. You could be a market risk professional, go on to do trading on
Yeah.
the floor. Um, so you could be in finance. In finance, there are a lot of skills that you pick up which can help you get into risk management and vice versa.
Mm.
Compliance is another area. Regulatory risk is another area where you can, if you have interest in that part of the world. So if you have legal training, those are good areas to get into. Um,
Mm.
Again, no one
No
certification.
silver bullet.
I
Yeah.
wish there was, as a hiring manager also, it would make my life easier if there was something like that to say that, come with this degree like a chartered accountant or a doctor or a lawyer, and then you're hired. But as risk managers, we also struggle with this, that how do you find good talent? It's not easy to find, but
Yeah, that's
but
true.
diversity of experience, always a good thing.
Fantastic. And Lalit, I guess we talked about the profile of like an RM, but for the people who are joining us who are currently risk managers in some way, shape, or form, ops, credit, market, for example, what's like a what kind of advice would you give these people, especially for those folks who are currently working in sort of I would say traditional brick and mortar type of banks? What do you think is the best favor they can do themselves, in terms of being future ready, future proof? What sort of advice can you give these folks?
If you are within risk management, try and diversify and move into other areas of risk. So if you are in operational risk, move into areas, for example, technology risk. Technology risk is part of operational risk. Operational risk itself has multiple subcategories.
Yeah.
So again, within the company, if you're interested in your risk category and you're happy to grow within that, then by all means, absolutely nothing wrong with that. I know people who are who always want to do operational risk and nothing else but operational risk, and that's
Right.
perfectly fine, right? There's a perfectly good career in that.
Mm.
But if you do want to diversify, then within your own organization, talk to your CRO, talk to your risk managers, and as a part of your career conversation and your career plan, absolutely say that I would like to get into a different category of risk. And can I, look to do that? So enterprise-wide risk management is another area which has become very important over the years. So people from operational risk can go into that. People from ERM come into operational risk. Technology, cybersecurity are very interchangeable. Model and credit risk are very interchangeable. So there are, like I said, adjacent risk categories,
right,
to which you can migrate, and from there move on to another adjacent category.
And also, I guess on a more related note, but on the flip side of the coin, I mean, are there how do you say, are there any areas that you feel within risk management that possibly could be at some sort of risk? I know it's a funny thing to say that, but basically,
Yeah.
you know what I mean? Like, yeah, those areas where you feel like, oh no, if you don't do something about those skill sets right now, you might find yourself in an unpleasant situation. Do you know what I mean? Like in terms of jobs and so on. So, yeah.
No, look, all of us have to guard against that.
Mm.
All professions are at risk. And someone the other day gave me a great example that those of you who use this again, betrays my age, right? Nokia phones. Nokia phone was a great phone. Yeah, Nokia phone was a great phone. It still is a great phone. It's probably better than iPhone, but people don't want the phone, right? The utility of a great phone has gone. Now you want something that can also help you play video games and watch TV and music. Nothing wrong with Nokia as a phone. So you could be a great risk manager of a category X. But if that's not required or other things are required, then no matter how good you are, your requirement has gone away, right?
Yeah.
So all of us as risk managers also have to continuously learn and evolve. So banking has also changed from traditional brick and mortar to digital. And in the future, it will continue to evolve into something else. I mean, there are people who say that in the future, banking will be needed, banks won't be needed. So people go on to make those extreme predictions as well. So risk management and other functions within the bank, including RMs, will have to make that change and transition over time, right? And all of us are at the risk of redundancy or being irrelevant unless we change. Now, risk categories themselves will not go away. The risk of lending money badly will not go away. Operational risk itself will not go away. What changes is the way these things are done in newer organizations as technology changes. What also changes is their relative importance. So as you have more and more technology, information, analytics available, the management of credit risk may become more and more scientific and more technical and less judgmental. And machines may take over the job of an underwriter. Okay. And that is absolutely going to happen. So even within risk, certain jobs are at a risk in the future of becoming less relevant. The fact of the matter is that the requirement to manage credit risk will not go away. And so if you are in an area which is likely to be disrupted by technology, it will be a good idea to learn about how to do the same thing in the modern world and adapt to that world. So I would say that no one has a luxury to be complacent, and everyone should think about what are they going to do 5 years from now, and will their job exist 5 years from now, and continuously prepare for that future.
Yeah, and I guess that also ties into making sure that one is not internally focused but externally focused in terms of
Absolutely.
reading a lot and finding out what the trends are and where things are
Absolutely.
heading, and trying to plug in those gaps and trying, as you mentioned, sort of adjacency, and try to build the beta model of yourself, for the
Absolutely.
future.
And
And
be a little
that's great.
uncomfortable, because look,
Oh yeah. Yeah.
it's very comforting to be in your current situation and what you do and where you are, and you may feel that nothing will change. All change is uncomfortable, no matter how small or how large.
Mm,
Changing
mm,
your house to changing your whatever, all change is discomfort to some extent. And I think it is
correct.
important to have that 5-10% discomfort in your life at any point in time, either
Mm,
through a new learning process or through a change of role or through a change of environment, whatever it is. Because that 5% of discomfort is what builds muscle. It's like exercising. Exercising is uncomfortable, but it builds that muscle to
mm,
make sure you last that much longer. And so is it with a career. So you have to
mm,
have that part of your day left for that exercise, corporate
mm,
exercising, where you are
mm,
uncomfortable, either by taking jobs you've not done before or aspiring for those and preparing for those.
great.
No one has the luxury of just sitting and saying that nothing will change in 10 years.
Yeah, yeah. Those people with, I guess that kind of mindset is, I guess it's a dangerous mindset, basically. Um,
It
yeah, and I think, I have well, for me at least, I think one of the final questions I have for you, Lalit, is more like a navel gazing sort of crystal ball question. Like, for yourself in your current role, what do you see will be the most pertinent and prominent or pressing issues that CROs like you will have to contend with as you know we get even more digital, and as like trust grows, for example, moving to the future? What keeps you up at night, or what sort of issues do you feel that you have to, you're gonna have to contend with, that will present
Yeah,
a challenge? Yeah.
yeah. So absolutely. So for us in trust, me, my team, all of us,
Mm,
we continuously worry about two or three things. One
mm,
is safety and security of our customers' information. So, cybersecurity is a very important risk for us. Our ability to provide uninterrupted service to our
mm,
customers,
mm,
which is resiliency, robustness of our technology is very important for us. Protecting our customers from fraud
mm,
is an important risk that we continuously worry about and we continuously uh, uh, work towards. Delivering our customers a great experience, because we are in a competitive landscape, and products get cloned very quickly. uh, Everybody moves faster and faster and faster. So how do you continuously add value to customers is something that we all worry about. So
mm,
while I'm a risk manager, I'm also equally a stakeholder in the success of the broader organization. So if we
right.
don't offer the right kind of product to our customers, then we are at the risk of being irrelevant as an organization. We talked about people becoming irrelevant. Organizations become irrelevant as well. No matter how good you are today, you may not be good tomorrow. And there is somebody who's out to eat your lunch. So, we've had a great start and, we've taken customers, but there could be another person, who's out to beat us in our own game. So
Oh yeah.
we worry about making sure we serve our customers as well as we can, keep them safe, keep their money safe, keep the organization up and running. Uh,
Mm,
and finally, how do we maintain and retain talent, right? People
mm,
is our biggest strength and skill in the modern world, which is the world of knowledge and technology. And so how do we
mm.
look after our own people? So these are
That's
the things we collectively as a team worry about, and I'm very much, part of that thought process.
fantastic. Okay, there are a couple of questions that we can take, but before that, Elisa, if it's okay, can you just deploy our usual survey for the folks who are here listening in, and the folks who are familiar with our programming? You'll see that usual survey, which will help us immensely in terms of whether or not you enjoyed the session, and how we can do better, and what you'd be looking for in the future in terms of content. And while you're filling this up, and I promise you it'll take 15 seconds, 20 seconds max, right? I'm just going to try to tackle some of these questions with Lalit. So Lalit, the first question that I'm looking at is kind of, I mean, at least for me, I'm going to read it, but hopefully, we can sort of understand it together. So this individual has asked this question: what kind of technology is used to track and maintain funds? Okay. For example, a bank payment in of $10,000, what sort of solution is used to track the payment out cannot be more than 10,000? Do you kind of sort of understand that question?
Yes, so I think I do. I hope I
Okay.
do.
Okay.
Let me try and answer, and the person
Let's
who's
try.
asked
Let's
can
try.
then
Yeah.
say that, if
Okay.
it's okay. So yes, so look, movement of money in the banking
Yep.
system
Mm,
is a function of two or three things.
mm,
Where the money is coming from, where the money is going to sit, and what we call in the industry payment rails.
mm,
So payment rails are literally just that. How imagine a train and imagine it on tracks, and what rails is it going to use from going to point A to point B.
mm, mm,
And as an example, PayNow is a payment rail, Fast is a payment rail, Gyro is a
mm,
payment rail, right?
mm,
So these are all payment rails which are there in the industry. And then we have banks and institutions on both sides of those rails. Money leaves from one station and goes to the next station. And uh, the institutions that are sending money and the institutions that are receiving money have core banking systems. Those systems can be programmed to put limits on both the receipt of funds and sending out of funds, depending upon the use case requirements, etc., etc. So
mm,
those are typically how we use to track money going from place A to place B. The other way is through credit cards. So if you are a holder of a credit card, and many of you, maybe you all have a credit limit, that credit limit defines the maximum amount of money that you can spend on anything. And that's, again, we have systems which keep track of that in real time and then allow you to move the money. Of course, you need to have money in your bank account to be able to send money. So if I want to send Adrian $1,000, I
Thank
better
you.
have $1,000 to send to Adrian. Otherwise, how?
Yeah,
So
exactly.
hopefully I've tried to answer the question as best as I could understand it.
Well, I think you understand it better than I did. But okay, so the next one is again from another anonymous attendee. Basically, is blockchain used in any way to manage risk? Is that something that you can tackle?
Yes, so blockchain is a technology,
Mm-hmm.
and it's at this point in time, its use case, the most famous use case is, of course, cryptocurrencies.
Yes.
And if you follow that market and if you follow that sector, it's seen a little bit of an up and down in terms of the valuation. Some people have made a lot of money, some people have lost a lot of money, and underlying technology is blockchain. There are uh, a few features of a blockchain that are very useful from a risk management standpoint. So blockchains can be used to identify a trail of ownership. And that is what makes it very safe. That's one feature. Second feature is that they use consensus mechanisms so that there are decentralized methodologies to agree on a certain transaction, which
Mm,
provide a lot of resilience and safety. Um, it's not controlled by anybody. That's
mm,
a big positive. At the same time, it's seen as a negative by many regulators, because if nobody's in charge, then who's in charge of this? So that can be a strength, because it again gives a lot of resilience to the system, but it also creates a little bit of opaqueness to the system.
mm,
So can you use it in risk management? Yes, you can use it in risk management. I think there are certain use cases where people are trying to do it, and banks are trying to do it, particularly where the contracts are of higher value. But in retail risk management, as of now, the use is fairly limited.
mm. Okay, got it. I have a okay, whoa, hang on a second. I've got another question from another channel. Uh okay. Given that technology will impact current roles in risk management, how can one progress in the area to remain relevant? I guess we sort of talked about that earlier about upskilling and things like that. Is anything else that you wanted to add to that?
Yeah,
Answer?
so let me share my personal experience, right? So I
Mm,
come from a slightly more traditional bank, and
mm,
I got into a digital bank, right?
mm,
And my experience of this is that, and one can, I think the more fundamental question is, how does a virtual or a digital bank differ from a traditional bank? I
that's
think
a very good, yeah, good
yeah,
way,
I
yeah.
think there are two or three things. One is that you have a more modern technology infrastructure,
Mm,
right? You have a more modern version of everything, or a brand new version of something like a core banking platform, etc. The second thing is that the data and availability of information is real time, which is not the case in many traditional banks, not because they don't want to do it, but because that's how those systems are configured. It takes information some time from the point of transaction to the point of use. They can change it, but it takes a lot of effort. So what does it mean for risk management? What it means for risk management is that you have to react to problems, and you also have the ability to react to problems that much faster, because information is available faster to you. Things also happen at a higher speed. So what does it mean for risk management? What it means is that you have to think through a lot in terms of your processes. They are automatable, but at the same time, if something goes wrong, it goes wrong for a large number of customers very rapidly. So what changes is your response time, and the fact that you work with technologists to very quickly identify where the issue is and fix the issue. So does not mean that everybody needs to know how to code. I just want to say that, and maybe it's a little controversial to say it as well. Just because you work in a digital bank doesn't mean that everybody is a software engineer or an expert. We have a lot of specialists who are technology experts and software engineers and developers, but not everybody is doing that. We work with them and use their expertise to deliver a solution which we design, and we specify to them. So you could be the designer, and then they could be the manufacturer of your solution using software code. So that's another thing, because people sometimes believe, and even I used to believe that, oh, you need to know coding to be able to work in a digital bank. That's not the case. But you need to be able to think through a problem and see how it is going to get implemented in a machine, and what problems could occur, and how could you build controls around that.
Right.
That is an ability that you need to develop.
Fantastic. Okay. Cognizant of the time, we have 3 minutes left. And I guess just like I have a very standard first question, Lalit, I have a very standard last question. And that is basically, final thoughts, words that you might have for people who are joining us here today, people who are considering a career pivot, people who are currently out in the open looking to get back into work again. Are there any sort of like last words that you want to offer the folks who are with us today before you go?
Yeah. So first is, I'd like to thank everybody for taking the time on a Friday afternoon to listen to this. So thanks to everyone who did that. And the second thing that I would like to say is that whether you're in work, whether you're in risk management, or you're looking for it, first is don't give up. Second is continuously learn about things that are happening in the industry, and particularly in the area that you've been and the areas which are next to it and adjacent to it, right? It is that much easier to make that transition rather than say that, and it is difficult for me. If I were to tomorrow say that I want to become a modeler, well, I won't be able to do that, because I would require many years of training and experience in doing something like that. So even if you are, for example, a doctor, or you're a GP, tomorrow you can't become a surgeon. It requires years of training, even though you're in medicine. So do keep up with the industry trends. Do look at your career in blocks of 5 years and say that, where am I going to be in 5 years' time? Will my job remain? And what do I need to do to change? And make those proactive decisions and steps. Sometimes they will be difficult and uncomfortable, but they need to be done.
Fantastic. You know what? I'm inclined to believe you because I trust you, because the word trust is just behind you like a million times your background. So for those people who are with us here today, I think lots of words of wisdom today. Want to thank Lalit for being here. Thank you for being so generous with your time. Hope that we can work together again at some point down the road. But again, many thanks on behalf of the IBF team. It was so easy. This conversation was so easy and such a pleasure. I want to wish you a good rest of it's weekend already, so good weekend, and keep in touch, and hope we can do something again together.
Thank you so much, Adrian, and a real pleasure, and thank you for the opportunity. And again, thanks to IBF and all the people who joined in to listen.
Fantastic. Okay, guys, thanks so much for joining us, for the people who joined us today, and we will see you at the next our next programming, next session. Thanks, everyone. Bye.
Bye-bye.